Welcome back to the Gold IRA Blueprint podcast. We like to really dig deep into the stuff that matters most to you. And today we're tackling a question we get a lot from listeners,
hmm
specifically about how to choose between a gold IRA and a gold ETF for retirement planning.
Yeah, those are two popular options when you're looking at diversifying your portfolio and, maybe taking advantage of some of those tax benefits that come with precious metals.
Exactly. And it can get pretty confusing trying to figure out which one is right for you.
Yeah.
Especially when it comes to things like taxes and, how accessible your money is and all that.
Right. And that's exactly why we're here today, to break it all down in a way that makes sense so you can make an informed decision.
So let's just jump right in. One of the first things people always want to know is what's the big difference between actually owning gold, like having a gold bar in your hand, versus owning shares of something that just tracks the price of gold?
That's a great starting point. It really gets to the heart of what makes these two options distinct. With the gold IRA, you're actually holding physical gold.
Oh, wow. So I could actually have like a gold coin or a bar stashed away somewhere.
Yeah, exactly.
Yeah.
You own it outright. It's held in a secure vault for you. And that can be really appealing to some investors who like that tangible sense of ownership.
I can see that. It's like, peace of mind knowing you have something real to back up your investment.
Exactly. Now, on the other hand, with the gold ETF, you're buying shares of a fund that holds gold. So you're not directly owning the physical gold itself.
So it's more like owning a piece of paper that represents a portion of that gold.
That's a good way to put it. You're basically betting on the price of gold going up, and the value of your ETF shares will fluctuate along with those market movements.
Okay, I'm starting to see the difference here. So with a gold IRA, I'm holding the actual gold.
Mhm.
And with a gold ETF, I'm kind of like owning a slice of a bigger pie of gold ownership.
You got it. That's the fundamental distinction between the two. And it's important to keep that in mind when you're weighing your options.
Gotcha. Now let's talk about taxes, because we all know how important those are when it comes to retirement planning.
For sure, taxes are a huge consideration, and this is where gold IRAs can really shine.
Oh, yeah. How so?
Well, just like with a traditional IRA, your contributions to a gold IRA may be tax deductible, meaning you could potentially lower your taxable income right now. And plus, any gains your gold makes within the IRA are tax deferred.
So I won't owe any taxes on those gains until I actually withdraw the money during retirement.
Exactly. That can be a really nice perk, especially if you're in a high tax bracket right now.
Makes sense.
Yeah.
What about gold ETFs? How do those work when it comes to taxes?
With gold ETFs, the tax treatment depends on how long you hold those shares. If you sell them within a year, any profits are considered short-term capital gains and taxed at your regular income tax rate.
Okay, and what if I hold on to them for longer than a year?
Then you'll qualify for the lower long-term capital gains rates, which can be a lot more favorable tax-wise.
So if I'm planning to hold my investment for the long haul, a gold IRA might be the better bet when it comes to taxes.
Yeah, that's a good rule of thumb, but of course you should always consult with a tax professional to get specific advice for your situation.
Absolutely. Good advice. Now, I'm curious about accessibility. You know what? If I need to get my hands on my money quickly, is one of these options easier to access than the other?
That's a great question. And when it comes to accessibility, gold ETFs definitely have the edge. Because they're traded on stock exchanges, you can buy and sell them just like any other stock.
So I could sell my shares and have the cash in my account pretty quickly.
Exactly. You have that immediate access to your funds, and there are no penalties for selling.
That sounds pretty convenient.
Right.
What about gold IRAs?
Well, because gold IRAs are specifically designed for retirement savings, there are some restrictions on withdrawals before you reach a certain age.
Makes sense, to encourage people to leave that money for retirement.
Exactly. If you take an early withdrawal, you'll typically face a 10% penalty on top of your regular income tax. So there's definitely an incentive to leave those funds alone until retirement.
Got it. So gold ETFs for flexibility, gold IRAs for those long-term tax benefits. Now, what about fees?
Fees. Everyone's favorite topic,
Yeah.
right?
Yeah, they can really make a difference in your returns over time.
Absolutely. So let's break it down. With gold IRAs, you'll typically have storage fees for your physical gold. These are charged by the custodian who's responsible for keeping your precious metals safe and secure.
Okay, that makes sense. And what about gold ETFs?
Gold ETFs come with their own set of expenses, primarily in the form of an annual management fee. This fee is expressed as an expense ratio, and it covers things like buying and selling the gold handling administrative tasks and so on.
So gold IRAs have storage fees, gold ETFs have management fees. Got it. Anything else to watch out for on the fee front?
Both gold IRAs and gold ETFs might have some additional costs too, like transaction fees for buying and selling, or account maintenance charges.
So it pays to shop around and compare the fee structures of different providers.
Absolutely. You want to make sure you're getting the best deal possible. And speaking of getting the best deal, if you're considering a gold IRA, we have a fantastic free checklist over at goldirablueprint.com/exclusive.
That sounds helpful. What's on the checklist?
It's packed with tips to help you choose the right gold IRA company. It walks you through some key things to look for, like fee transparency, security measures, and other important factors.
That's awesome. I'm sure our listeners will really appreciate that.
I hope so. We really want to make this process as easy and stress-free as possible for everyone.
Well, I think that's a great place to take a quick break. We'll be back in a moment to dig even deeper into the pros and cons of gold IRAs and gold ETFs. So stay tuned. Okay, so we're back. And before the break, we were talking about the fees associated with gold IRAs and gold ETFs. Now let's really dig into the big question. Which one is actually better?
Yeah, that's what everyone wants to know, right? Gold IRA or gold ETF, which way to go?
Exactly. Is there a clear winner? Or does it really depend on the individual investor?
You hit the nail on the head. It really all comes down to your specific situation. Your investment goals, your risk tolerance, your time horizon, all those factors play a role in determining which option is right for you.
Okay, so let's break it down then. Let's say someone is primarily interested in long-term wealth preservation, protecting their savings for retirement. Would a gold IRA or a gold ETF be a better fit in that scenario?
Well, if you're looking for long-term stability and you're attracted to those potential tax advantages we talked about earlier, like tax-deferred growth, a gold IRA could be a really solid choice.
It makes sense. Gold has this reputation for holding its value even when other markets are going crazy.
Exactly. It's often seen as a safe haven asset, something that can help protect your portfolio from inflation and economic uncertainty.
So it's like that steady Eddie in your portfolio,
Yeah.
the one you can always count on.
That's a great way to put it. Now, on the other hand, if you're thinking more short term, maybe you want to try and capitalize on some of those gold market swings we hear about. Would a gold ETF be a better option in that case?
Yeah, that's what I was thinking. Gold ETFs offer that liquidity and ease of trading
Mm-hmm.
that might be appealing to someone who's looking to make some moves in the market.
Exactly. With a gold ETF, you can buy and sell shares throughout the trading day, reacting to those market trends as they happen.
So if I'm feeling a little bit adventurous and want to try my hand at riding the waves of the gold market, a gold ETF gives me that flexibility.
Precisely. You can hop in and out of positions as you see fit. It's all about timing and strategy.
Okay, so we've got long-term stability with a gold IRA, short-term flexibility with a gold ETF.
Mm-hmm.
But let's be realistic here. There are always risks involved with any investment, right? What are some of the risks we need to consider when it comes to investing in gold?
You're absolutely right. No investment is completely risk-free, and gold is no exception. One of the primary risks to be aware of is market volatility.
Even though gold is seen as a safe haven, it's not immune to those market swings.
Nope. Gold prices can go up and down just like any other asset, and those fluctuations can impact your returns, whether you're invested in a gold IRA or a gold ETF.
So we need to be prepared for the possibility that our gold investments could lose value.
Exactly. It's important to go in with realistic expectations. And don't invest more than you can afford to lose.
Good advice. Okay, so market volatility is one risk.
Hmm.
What else should we be thinking about?
Another risk to keep in mind is inflation.
Inflation.
Even with gold.
Yeah, even with gold.
Huh.
While gold is often considered a hedge against inflation, meaning it tends to hold its value when prices are rising, inflation can still erode the purchasing power of any investment over time.
So even if the price of gold goes up, if the cost of everything else is going up even faster, I might not actually be better off.
That's the tricky thing about inflation. It can sneakily chip away at the value of your savings.
Gotcha. So we've got market volatility, we've got inflation. Anything else?
Well, specifically with gold ETFs, there's also something called counterparty risk.
Counterparty risk. What's that?
It refers to the risk that the entities managing the fund, like the custodian or the ETF provider, might run into problems and not be able to fulfill their obligations.
Oh.
So it's kind of like putting your trust in those who are running the show.
Exactly. You're relying on their stability and competence to manage the fund's assets effectively.
Okay, that's something to consider, for sure. So we've got market volatility, inflation, and counterparty risk as some of the key risks associated with investing in gold. Any other words of wisdom before we move on?
I think the most important thing is to do your due diligence. Research thoroughly, understand the risks involved. And if you're ever unsure, don't hesitate to seek out expert advice from a qualified financial advisor.
Absolutely. Having a professional in your corner can make a world of difference. especially when it comes to something as important as your retirement savings.
Couldn't agree more. Now that we've covered the risks, let's shift gears and talk about how to actually decide between a gold IRA and a gold ETF. What are some key questions someone should ask themselves to help make the right choice?
Yeah, let's dive into that because I think a lot of people are probably feeling a bit overwhelmed at this point. There's a lot to consider.
You're right, it can be a lot to take in. But by asking yourself a few key questions, you can really start to narrow down your options and figure out what's best for your unique situation.
Okay, I like that. So what's the first question someone should ask themselves?
I think the most important question is, what are your investment goals? What are you hoping to accomplish by adding gold to your portfolio? Are you focused on long-term wealth preservation, or are you looking for more short-term growth potential?
So it all starts with defining your why. Why am I even considering gold in the first place?
Precisely. Once you understand your motivations, you can start to figure out which investment vehicle aligns best with those objectives.
Okay, goals first. Got it. What comes next?
Next, you need to assess your risk tolerance. How comfortable are you with the ups and downs of the market? Could you stomach a potential drop in the price of gold without panicking?
Because let's face it, some people are more comfortable with risk than others.
Absolutely. And it's crucial to be honest with yourself about your risk tolerance because it will directly impact your ability to stick with your investment strategy over time.
So if I'm someone who tends to freak out when my investments dip even a little bit, maybe a short-term, high volatility approach isn't the best fit for me.
That's a very wise observation. You want to choose an investment that you can feel comfortable with, even if it means potentially sacrificing some potential for big gains.
Okay, so we've covered goals and risk tolerance. What's the third question on our checklist?
The third question is all about your investment timeline. Are you investing for the long haul, like for retirement, or are you thinking more short term?
Right, because we talked about how gold IRAs are typically better suited for long-term goals, while gold ETFs offer more flexibility for those who are looking to make shorter-term moves.
Exactly. Your time horizon will play a big role in determining which option is the right fit.
Okay, so three key questions to consider: your goals, your risk tolerance, and your time horizon. And once you've got a handle on those, you can start to narrow down your options.
Precisely. And if you're still feeling unsure, don't hesitate to reach out to a financial advisor. They can help you weigh the pros and cons of each option and create a personalized investment plan that aligns with your unique circumstances.
That's great advice. Sometimes it's just helpful to have someone to talk it through with, someone who can provide that expert guidance and reassurance.
Couldn't agree more.
Yeah.
Now, while we've covered a lot of ground today, there's one more important point I want to emphasize, and it's all about the importance of diversification. That's right. Diversification is absolutely key when it comes to building a solid retirement portfolio. And gold, whether you choose a gold IRA or a gold ETF, should just be one piece of that puzzle.
So it's not about putting all your eggs in the gold basket.
Nope, not at all. You want to spread your investments across different asset classes like stocks, bonds, real estate,
Yeah.
and yeah, precious metals too.
So it's all about creating that balance, making sure you're not overly exposed to any one particular asset.
Exactly. You want to create a portfolio that can weather those market storms, ride out those ups and downs. So how should someone think about balancing gold with their other investments? Are there any general guidelines to keep in mind?
Well, a well-diversified portfolio typically includes a mix of stocks, bonds, and what we call alternative investments, which can include things like real estate or precious metals. The specific allocation, the percentage you devote to each category, will really depend on your individual circumstances, things like your risk tolerance, your time horizon, and those financial goals we talked about earlier.
Right. It's about finding that sweet spot that aligns with your personal situation.
Exactly. For instance, if you're younger and have a longer time horizon before you need to access your retirement funds, you might be more comfortable having a larger portion of your portfolio in stocks.
Because historically, stocks have the potential for higher returns over the long run.
That's right. But of course, they also come with more volatility. So you need to be prepared for those potential ups and downs. Makes sense. Then as you get closer to retirement, you might want to shift towards a more conservative approach, maybe increasing your allocation to bonds and potentially adding some gold to the mix.
That's a common strategy. As you get closer to retirement, you might be less comfortable with those big market swings. And gold can provide a sense of stability and security.
So it's all about adjusting your portfolio as you move through different stages of life.
Exactly. It's not a one and done thing. You want to regularly review your portfolio and make sure it's still aligned with your goals and your risk tolerance.
And if someone's feeling a bit lost, Unsure about how to structure their portfolio or how much gold to include, where can they go for help?
Well, that's where a qualified financial advisor can be incredibly valuable. They can take a look at your overall financial picture, understand your goals and risk tolerance, and help you create a tailored investment plan.
So they can provide that personalized guidance that many people need.
Exactly. They can help you navigate all those complex decisions and make sure you're on the right track.
That's awesome. So as we wrap up our deep dive into the world of gold IRAs and gold ETFs, what are the key takeaways you want our listeners to walk away with today?
I think the most important thing is to remember that this is a personal decision. There's no right or wrong answer when it comes to choosing between a gold IRA and a gold ETF. It really all depends on your individual circumstances, your goals, and your comfort level with risk.
So do your research understand the pros and cons of each option and really think about what's best for you?
Exactly. And don't be afraid to seek out expert advice if you need it. A financial advisor can be a great resource.
And for those who are interested in learning more about gold IRAs, don't forget to check out that free checklist we mentioned earlier. You can find it at goldirablueprint.com/exclusive.
It's packed with helpful tips and information to guide you through the process.
Awesome. Well, I want to thank you so much for joining us today and sharing your expertise on this important topic. It's been incredibly insightful.
It's been my pleasure. And remember, investing is a journey, not a destination. So stay informed, stay engaged, and keep learning.
That's great advice. And all our listeners out there, thanks for tuning in. We'll see you next time for another deep dive into the world of retirement planning. Happy investing.